Mr. Mbassi, we are here in Johannesburg to attend a training on access to African municipal sub-sovereign market. As the Secretary General of UCLG Africa, could you provide us an overview of the objective and the key outcomes of this event?
Let me start by stating that there is a daunting issue on financing investment at the local government level, subnational local government level. This daunting question is being addressed in a bizarre way. Number one, people were saying that there is a lack of bankable project. This is why the local level cannot access funding. And many local government have the impression that they have projects because they have needs that should be addressed and that are expected, and that they cannot access money. So we, as local government organization, our members said to us that we need to get out of this chicken and egg issue and see the different ways of finding resources for local governments. You know that there are mainly three resource streams for local government. Number one is own sources revenue. This is what is based on the tax revenue from local government, from services provided by local government, and taxation on the asset land of local government. This is the first stream. The second stream is fiscal decentralization, the sharing of public money between the national government and the local government. And the third one is borrowing. And borrowing has itself three streams. The first stream for borrowing is direct borrowing to the banking system. This direct borrowing to the banking system, many local government is caused to hit to solve their operating issues, where they cannot pay salaries for their people and so on. They go to the bank and then say, lend us money, we'll pay back after we have received the money from the grant from the government of our taxes revenues. This is the first stream. The second stream is to go to the capital market by issuing bonds. And frankly, this stream is not used largely in Africa. Only some countries use bond market. South Africa the first, Nigeria second, and the others are using a different level, different kind of accessing the bond market, either from specialized tools, specialized instruments, like in Morocco FEC, in Cameroon FECOM, in Senegal ADM. So there are a set of specialized entities that lend money to local government, but it's not directly the financial market. Only a tiny number of countries have access to the bond market. And this is unfortunate because the bond market represents one $1,800 billion a year floating around the world, and Africa is only 1% of this, and this is not acceptable, given the fact that the growing population, urban population, the growing demand for services at local level is in Africa. So it is important that this stream of bonds be used more in financing local authorities. The last one is the public-private partnership. And this is also a way of attracting money to investment in local governments. But the PPPs are a very promising stream, provided we understand what it means exactly, and we master the process of negotiating PPPs. So this meeting is about equipping the CFOs of city financial officers of African local government to be acquainted to this new and innovative way of financing African cities, that are the bond, issuing bond on the market, borrowing, and signing PPPs agreements.
Okay, Mr. Mbassi, thank you. You've answered partially my second question, that was about how the sub-sovereign municipal bonds can contribute to the overall sustainable economy.
So I answered this one.
Thank you. And in that highlight, what are the strategies or initiatives can be implemented to support those African cities in enhancing their creditworthiness and developing bankable projects, and that can attract investors in their municipal sub-sovereign bond market? And then how UCLG Africa can facilitate the identification and promotion of viable, sustainable projects that align with the development priorities of African cities?
You know, there is something that we really need to change once for all. You don't develop people, people develop themselves. This means that we don't have to do much but listening to people and creating a platform for that. And then be confident that they know what they want. So if they know what they want, you just need to have an informed dialogue, because ignorance is not a way to have a successful dialogue. We need to bring a set of information to have an equal dialogue between the people. But then you rely on their wisdom to know what they want for themselves. So I want to challenge three of what you said as a question. First, what is a bankable project? Second, what is convincing the capital market to get into the demands of African local government? And third, what is development finance? It is important to understand that all the monies that is lent to you be repaid back by the people. We are just intermediaries. It's the people that will pay back. So there is no way you can go to borrowing without consulting the people and without having the priorities of the people, because they are the one paying back. But we should also let the people know that the numbers that they are here now will increase. So you don't borrow only for this generation, we will borrow also for the next generation. And remember, we are borrowing for investment that are a long-term maturity. If you borrow for a port, it's for a century. If you borrow for a metro, it's for a century. If you borrow for a plant, it's for 20 years. So once you make this decision, know that you are making a decision for 1 century, or 50 years, or 20 years. And remember, the people that will pay back will be more numerous than those who are doing the borrowing today. So it is crucial that you have an informed dialogue on these kind of issues. So what we call bankable project can be questioned. If at all it is an instantaneous consideration of the bankable project and not the generation of bankable project. So it is very clear that sometimes the capital market system is not forward-looking compared to who will be paying back. More people will be paying back, and not instantaneously those who are here today. And the way they rate the payback is not adequate. And we need to educate these people to change a little bit on the consideration they have of what is a maturity, what is let's say the internal rate of return, and so on. We need to really discuss, and I'm very much in line with what David Jackson said, that local finance is development finance, and it has its own rules. As I used to say, a road is not a street. A road don't care about the neighborhood. The street can't. A road is topography. A street is topology. It's totally different. It's different maths. So it is important to educate all of us on the change that need to be addressed or need to be incorporated in our way of thinking finance, borrowing, and the financial market. I don't know if I responded to your question, but I want you to understand that the mechanic in the same logic will not get us far. We need to change the logic so that the mechanic can be different.
Okay, and then what is the role of UCLG Africa in that process?
This is what we are doing.
Yes.
We are convoking the change of paradigm. And to do that, we want to bring facts. We want to bring people, because, you know, guidelines, tools mean nothing if people that are in charge are not fully convinced, trained, skilled to conduct the change.
In that light, what extra resources UCLG Africa is putting on the table to support and provide the capacity and knowledge of cities in this domain?
If you follow me if you follow what I said, so this means I'm not a good teacher. I'm not a good, my pedagogy is low. I keep repeating, what you do for me without me, you do it against me. What we need to do as UCLG Africa is to create a space for the CFOs to take charge of this issue, and not us. We are nobody in there. The one in charge are the CFOs, are the mayors, and our role is to make them understand that they are the key players, not us. We are nobody in there. So empower them, and the result will be there. You don't need to be an intermediary or let's say a coach that impose on the players. The coach disappear behind the players. The coach play or act for his disappearance and not to impose himself to the team. Team know how to play. And if you build a team, let them play.
Okay, Mr. Mbassi, can you say the role of the African Territorial Trade and Trade Agency that UCLG Africa put in place in this process?
It just, what I'm telling you, what is this African Territorial Trade and Investment Agency? It's a tool in the hand of local authorities for them to go to the financial market. It's not ours. It's the tool of local authorities. And the moment they seize this tool and they manage it, our role is over. And we are building a momentum for them to own this tool and run with it.